Welcome to my YouTube channel Indian Bull versus Bear. Do you think that your money is working as hard as you are? I'll tell you the truth. The honest answer is a big no. In this video, I'll share most of the investment options that you have in India which could help you to put your money to work. So let's start. The investment options in India can be divided into four categories. First, fixed income and savings schemes. These are investment options that provide a predictable and steady return over the specific period. These schemes are generally considered less risky. They are popular among risk averse investors and those looking for stable returns and capital preservation. Number two is the market linked investments. These are financial products where the returns are tied to the performance of one or more underlying assets or benchmarks. Unlike fixed income investments, the returns from market linked investment fluctuate based on the movements in the linked market. Number three is the real estate. These investment options involve putting money into property with the expectation of generating income, appreciation, or both. It is a tangible asset class that can offer diversification to an investment portfolio. And last, the other options category, all other investment options like gold, other commodities, unlisted shares, P2P lending, cryptocurrencies, etc., come under this category. Now, these categories can be subdivided further, which I'll explain in this video. But there are six most important considerations before investing. These are first, average returns expectation. Your expectations about yearly returns from any asset class before investing. Second is risk tolerance, your comfort level with potential losses. Number three is investment horizon, the length of time you plan to stay invested. Number four, financial goals. What are you saving for? Retirement, education, or whatever else. Liquidity, how easily you might need access to your invested money. And finally, tax implications, how your investment returns will be taxed. So, all the investment options that I'm going to present to you in this video, they all have their pros and cons. You have to keep these 6 points in your mind before choosing any option. You need to be aware of the returns, the risks, your investment horizon, the financial goals that you have in mind before investing, liquidity needs as well as the liquidity made available by the asset class, and finally the tax implications. So all these needs to be kept in mind. So let's see the investment options in the first category, which is the fixed income and savings schemes category. So these are the 12 investment options in this category. First is the savings account. Savings account is a safe and easily accessible place to keep your money while earning a small amount of interest. It is designed for your short term financial needs and everyday transactions. The average returns from savings account is around 2.5 to 4%. Next is fixed deposit. A fixed deposit is a way to save a lump sum of money for a specific period at a fixed rate of interest. It offers higher returns than a savings account in exchange for keeping your money locked in for a chosen duration. It generally gives return between 5% to 8%. Next is the recurring deposit RD. Allows you to invest a fixed amount regularly for a specific period, earning interest similar to FDs. Average returns are around 5% to 7%. Next is PPF, Public Provident Fund, a long term government backed savings scheme with tax benefits. It has a 15-year lock in period, extendable in blocks of 5 years. At the moment, the interest rate in PPF is 7.1%. Next is the NPS, National Pension Scheme, a retirement focused government backed scheme offering market linked returns. Very important. This is partially market linked. It has tax benefits and different investment options based on risk appetite. The returns varies from 6% to 12% depending upon the plan that you have chosen, the amount of the percentage of your investment that has been invested into the market. So all those factors comes into play in NPS. Next is POIMS, which is Post Office Monthly Income Scheme. This provides a fixed monthly income for 5 years with a guaranteed interest rate, which is around 6 to 7%. Next is NSC, National Savings Certificate. It is a government backed savings certificate with a 5-year tenure and fixed interest, eligible for tax deductions under Section 80C. Current rates are around 7 to 8%. Next is SCSS, Senior Citizens Savings Scheme. This is specifically for individuals who are above 60 years of age. It offers a higher interest rate and tax benefits. The current returns are between 8% to 9%. Next is SSY, Sukanya Samriddhi Yojana. This is a government scheme for benefit of girl children, offering a high interest rate and tax benefits. The current returns are around 7% to 8%. Next is the RBI bonds, that is government bonds. They are secure long-term investment options backed by the government, so least risky, offering fixed interest rates, which are around 6 to 8%. Next is the debt mutual funds. Invest in fixed income securities like government and corporate bonds. They carry lower risk than equity funds. The returns are around 6% to 9%. They can vary. And finally, the corporate bonds. These are debt instruments issued by companies to raise capital, offering fixed interest rates. Uh, Risk varies based on the company's credit ratings, and the returns vary from 7% to 10%. Now, let's move on to the next category, and it is the market linked investment. So, in market linked investment, these are the options that are available for the investors. Stocks, equities, investing in shares of publicly listed companies on stock exchanges like BSE and NSE. They offer high growth potential but also carries high risk. Now, one thing to keep in mind for all market linked investment, that in the previous category your principal, the risk on your principal amount was very less, but in this category you can even lose your principal. That is a very very important point to keep in mind for all those who are interested in investing in the market linked investment. Yes, the returns are high, but the risks are very high too. So we have checked the stocks, equities. Now let's move on to the mutual funds. Mutual funds are a pool of money from multiple investors to invest in various asset classes like stocks, bonds, and or combination of both. These are managed by professional fund managers offering diversification. There are different types to cater to varying risk appetites like equity funds, debt funds, hybrid funds. Next is equity linked savings scheme, ELSS. It is a type of equity mutual fund that offers tax benefits under Section 80C and has a lock in period of 3 years. Important point to note. Next is the unit linked insurance plans, ULIPs. They combine insurance coverage with investment in market linked funds, equity, debt, or hybrid. They offer tax benefits and long term growth potential. Next are the exchange traded funds, ETFs. They are similar to mutual funds but can be traded like stocks on an exchange. They often track a specific index or asset class. Next is the initial public offering, IPO. I am pretty sure that you must have heard of this. This is investing in the shares of a company that is listing on the stock exchange for the very first time. It is important thing. IPOs is only for the companies who are going to be listed on the stock exchange for the very first time. That is one major difference between IPO and the stocks and equities. And finally, sovereign gold bonds, SGBs. This has been discontinued by the government few months back, but it is still available in the stock market if anyone is interested. The government, these are the government securities denominated in gram of gold, offering a fixed interest rate in addition to potential capital appreciation based on gold prices. Let's move on to the next category, which is the real estate category, the favorite of most of at least the generation who are now in their 50s. In real estate, the first investment option is the land, which is investing in physical properties for potential capital appreciation and maybe rental income. So the chances of rental income or on land are limited, but the potential capital appreciation is definitely there. Second is the residential apartment. They can provide rental income and potential capital appreciation as well. Same is the case with commercial space as well. And then finally, REITs, real estate investment trust. They allow investment in a portfolio of income generating real estate assets through the purchase of units. These are similar to mutual funds. Now, REITs goes away from the traditional real estate, but eventually they too invest in real estate. So basically, there's a pool of money which is being invested in the real estate. Okay, now let's see the final category, which is the other investment options. So these are all the other investment options which are available to Indian investors. To start with gold. Now, gold is the best asset in the last, I think, around a year. At least certainly in 2025 till now, it is the best asset. It has proved to be the best asset because of the all the tensions in the world, the trade war, and all those things. This includes investing in physical gold, jewelry, coins, bars, or digital gold. This is often seen as a hedge against inflation. Next is the commodities. Now, investing in raw material like silver, crude oil, etc., can be done through commodity exchanges. Next is the Atal Pension Yojana (APY), a government-backed pension scheme specifically for workers in the unorganized sector, which provides a fixed monthly pension post-retirement. Then are the National Investment and Infrastructure Fund (NIFF). Now, these are government-backed funds investing in infrastructure projects. The retail participation is usually through specific schemes or funds that invest in NIFF. And then there is something called P2P lending, peer to peer lending. Peer to peer lending is a method of lending money to individuals or businesses directly without going through traditional financial institutions like banks. There are several platforms which offer P2P facilities these days. Some of them includes Lending Club, Fairsend, Landbox. These are some popular platforms. And the hot topic, cryptocurrencies. Now, cryptocurrencies, often called as crypto, are digital or virtual currencies that, unlike traditional currencies issued by government, which are also called as fiat currencies, typically operate on decentralized networks. Some of the cryptos are Bitcoin, Ethereum, Tether, etc. There are several platforms in India which provide the facility to invest in cryptocurrencies. Some of the platforms include CoinDCX, CoinSwitch, WazirX, ZapPay, Mudrex. These are all popular platforms in India for this. Now, there is something called AIF, PMS, and SIF. AIF stands for Alternate Investment Fund, PMS is Portfolio Management Service, and SIF is a new asset class introduced by SEBI just last year, which stands for Systematic Investment Fund. There are no fund houses which are at the moment providing SIF investment opportunities. Now, these are basically for the high net worth individuals who wants to invest a lump sum in the share market, but do not want to invest that much of a time. So the fund houses do it for them. The ticket size is very high. For AIF, the ticket size is minimum 1 crore rupees. PMS, it's minimum 50 lakhs rupees. And for SIF, it's going to be minimum 10 lakh rupees. Next is the unlisted share, another thing which is quite popular these days. Now, there are platforms which allow or which provides user an opportunity to invest in a company whose IPO is about to be listed in the stock market in few months or a year's time. The advantages of this is that the users get to hold the shares of our companies at a very cheaper price as compared to their IPO price. But there are several risks associated with unlisted shares as well. Some of them may be that the IPO date keeps on postponing because of XYZ reasons, or the liquidity is very low in these unlisted share space. There are several platforms in India which you can use for buying unlisted shares if you want. Some of them includes Incred Money, Vint Wealth, Stockify. These are the major and most popular of the platforms. Then is Invit. Invit is similar to REITs, but they invest in infrastructure projects like roads, power transmission lines, and pipelines. They offer regular income distribution and potential capital appreciation. And then there's something called as invoice discounting and trade financing platforms, which is quite uncommon. These platforms allow investors to fund short term invoices of businesses, offering potential returns based on interest charge. This is relatively new and a very high risk area for retail investors. Okay, and then is fractional ownership of assets. This is also something quite new to India market. Now, platforms are emerging that allow individuals to invest in fractions of high value assets like commercial real estate or even art, making these asset classes more accessible to the retail users. Now, there are couple of more options that an Indian user has. Foreign equity markets. Now, foreign equity markets, there are several platforms in India like IND Money, Vested, etc., which allow Indian citizens to directly buy or sell stocks in foreign countries like US, UK, or China. Now, there are tax implications on this, and uh, it would be another market to study for an investor. So investors who needs a lot of time and understanding if they are serious in foreign equity markets. It is easy, the platforms are easy, it can be done, but it is kind time consuming to track your investments after that. Similarly, there is another option, the last one which is I'm going to cover today is foreign real estate. Now, several countries allows uh, citizens of other countries to invest in their country and buy real estate. So this is also an option for high net worth individuals, especially who like certain countries and want to invest there instead of India. So there is an option for them to do that as well. So that are all the options that I wanted to talk to you about. I hope that you have learned something new in this video and are now aware of most of the investment options available to you in India. Always remember, work smarter, not harder. Thanks for watching this video. Please subscribe to the channel, like, share, and comment. I'll be back soon with another video. Goodbye for now.